Cast is now starting. All attendees are in listen-only mode.
Hello everybody, welcome to join our Start Trading with FM70 webinar today. And my name is Shane Choo. I'm the moderator for this webinar. As usual, if you can hear me clearly, can you please click raise the hand button on the control panel? Click raise the hand button in the control panel. If you can hear me clearly and see our good-looking speaker face and my face, all right. Thank you very much. You may put down your hands down. Thank you. You may put down your hands. All right. So today we have a webinar. It's organized by LifeChamp and sponsored by Bursa Malaysia as well as CIMB Futures. So in this webinar, in the next an hour and a half, we will show you what are this new mini futures product called the FM70 and how you can make money with this FM70. Now, disclaimer, whatever we share today do not give you any buy or sell tips. So if you decide to do it, you do it at your own financial risk. Is that okay? Now we have prepared a series of derivative webinars in this year, and today we are on session 5, which is this Wednesday. And next Wednesday, we will have another Start Trading with FM70. The only difference is that session, it will be held in Chinese. Okay, so next week, we're going to share with all the Chinese subscribers and attendees on how you can trade these futures in mid-70. Now, the subsequent 5 series are the Chinese webinars. In other words, our English webinars on futures have come to an end. And starting next 5 series will be on Chinese. So the first session will be next week, 19 September. Now today we are very honored to have invited CC back with us today. And you know, if you have followed through our previous webinar, he is very experienced in trading futures, especially in calendar spread. Okay. Now he is a full-time trader, and he has done a lot of trading because he is a local participant of Bursa Malaysia derivative. For a local participant, they need to trade at least 1,000 lots in a month. So there's a lot of contract involved. So today he take out his time, and you know, since he's a full-time trader, so today it is very special because he don't teach for a living, he trade for a living. Okay, he's a founder of Straits Index, a proprietary trading company, and associate participant of BMD. A trader, trainer, writer, and a speaker for SIDC CPE program, and so a columnist for Sinchu Daily and Money Compass for more than 10 years. Without further ado, let me hand over the control to you, CC.
Hey, Shane. Thank you for the invitation. Okay, let me show my screen. All right. So good evening, everybody. So today, we're going to talk about the new product of BND offering. We call it mini futures contract on FTSE or the composite index. The Bursa Malaysia Mid 70 index. So in short, it called FM70. So this is the contract that I find quite interesting because normally when you look at the market, or especially if you're trading stocks, so the stocks markets, you will have, you know, many indices. So namely the most famous one, of course, is FBMKLCI, but at times we still call it composite index, but I think it has been renamed for many years, which is the benchmark index. Okay, and then second, we will have the FBMT 170 and all this. So today we're going to focus on this index called FBM70. Okay, first we talk about futures is FM70 and this is FBM70. So let's go a bit of technical. So this FTSE Bursa Index series has got so many indices. Depends on the needs, okay. If you study correctly, it actually gives you some opportunity. First thing first, there will be large cap on the left, upper left. You have the large cap stocks which create an index called KLCI, which is FBMKLCI. And then there's a mid cap, that means medium capital, but they are not the largest, but they are actually medium-sized company. And this makes up of the mid 70, and then you have small cap and fledgling. Because of the size of the company are different, so they categorize in terms of the market cap. Now, what it do to us, I mean, in terms of trading futures, is that we used to only have one index or equity index in our market, but now we have more. So let's take a look here. So, well, a simple mathematics, 30 plus 70 equal to 100. So what is a 30? So as we know, FTSE Bursa Malaysia KLCI is actually comprises of 30 largest company by capital or market capitalization. That means in terms of the number of shares multiplied by the market price. So if you are the top 30 companies, then you will be inserted into the KLCI. So that means the KLCI is actually calculated the index movement from these 30 companies. All right. So, and then the next one is actually what we are talking about today is the next 31st to 100. This company we consider mid cap. So these 70 companies actually form another index called FBM mid 70 index. So this is the two indices. That means the 30 KLCI and the 70 mid cap. You add together, so it forms the top 100 stocks, which is the FBMT 100. So if you combine both, it becomes the FMT 100. So, but today we're going to focus on this index, which in the middle, that means it's actually on the 31st to the 100 stocks. Okay, to make it easier to understand, that means you have top 100 biggest company by market capitalization. So you have 100, but the first to 30th you categorize as FBMKLCI or just KLCI. Okay, and if you look at here, let me highlight. Okay, the top 1 to 30 will form the CI or KLCI, and we have been talking about the futures for this is actually the FKLI, so which we have been trading for many years, so which is the leading equity futures index for Malaysian market. And then now we have the other part which form the top 100, which is the 31st to 100 stocks, which is actually comprises and form index called FBM mid 70. And this mid 70 is used as an asset to actually create an index or futures contract using this index as the underlying asset. This is what we call the new index. Okay, that's how you get it. So let's take a look on the charting, okay, of the CI. First thing first, okay, you can see that this is actually a snapshot on the 28th of August. All right, this index is actually created based on 30 stocks. All right, so these 30 stocks, like S&P is 500 stocks, FBMKLCI is actually 30 stock, and okay, the next index is FBM 100. So 100 is actually comprises of 30 plus 70. And then now finally we will land on the 70 or FBM 70. Now, this is an equity index which actually you cannot trade directly. That means we cannot buy FBM 70 and you cannot sell FBM 70 because this is actually on another entity called Bursa Malaysia on the equity side, which I create an index to track all these stocks to give you the performance and so on and so forth. But actually, if you read FTSE brochure correctly or their reports on PDF, they actually say that to create an index like KLCI, FBM 70, and so on and so forth, is actually to create an asset which allow tracking indices, tracking fund, to be created based on these indices. So this is what actually exactly what BMD has done today. which the product was launched 27th of last month, August. Okay, since you cannot trade FBM70 directly because it's just an index, it doesn't give you a value that actually you can trade, or there's no structure for you to trade. But BMD as another entity is actually create an index, or we call derive an asset from this FBM70 we call FM70. So this is a contract based on the underlying asset. Okay, so FM70 is actually created with the FBM70 as an underlying asset. Okay, and the asset is actually FBM70, or you can call it reverse or mid-cap stocks. That means you're buying the FBM70, meaning you're investing or trading the FBM70 index, and in return, it actually gives you the mid-cap stocks. That means you're holding the mid-cap stocks, and the cash market of this is actually a cash settle market. That means it will not give you a stocks, of individual stocks that derive from this index. Okay, but it's actually give you an exposure, but in cash settle. That means when you make money, they will pay you in cash. If you lose money, they'll deduct from your account, so deduct from this your equity lah. So that's how an asset is created. So as long as it's a so-called exchange product, so it will be guaranteed the value. How this can be done is it derives such a way FM70 actually tracks the index for a final settlement. That means on the last day of trading, the FM70 should actually go back to almost the level of FBM70. So this is very, very much important. Just like the gold contract we have, FGLD, it tracks a London gold. So that means the value of this contract is actually created based on the value of this underlying asset, which in this case is FBM70 index. Now, why it's so important for it is because FBM70, although it's created from 70 stocks, but these 70 stocks not fixed 100% all the time. That means every, if not mistaken, 6 months, it will be reviewed. That means any stock that doesn't perform well, or it's not categorized as the top 70, mid 70 anymore, it will be actually demoted, and the next highest market cap in this mid cap category will be inserted into the index. That means you always get the quality stocks which rank from 31 to 100, and these are the stocks will be actually inserted and trading. It's created and calculated based on this FBM for FBM70, and FM70 will be trading based on this product. So this becomes very important as we goes on from here now. So this means FM70 will have to close the gap, if any, to FBM70 before the expiration. So this will create ultimately a contract which create this payable contract become a value asset. And as long as the exchange guarantee this value asset, then it will be tradable as in futures. And it's so important, which I'm going to share with you, why I feel this is actually very important index, because it gives you a lot of advantages which we're going to discuss. And on the 27th of August last month, is first traded. It's actually clocked quite a lot of volumes, and it has got August, September, and October. But 2 contract was quite active, which is August and September. Obviously, September will be more active because only 3 days trading for that month, and most of the traders probably want to trade the active next month rather than the 3 days contract. So hence that is what happens. And if you notice, there's another contract called spread contract here. Oh no, hold on the second last row. So this is another contract called spread contract. It's also actually tradable in this market. So over here, so this is a spread market. It's also traded That means there's some rollover or some trader even trading the spread market here. We go on more on trading in a bit. Okay, now how this can be benefiting traders or investors? To me, it fills the gap of blue chips and the mid cap, because all the time there will be only a blue chips contract, which is the FKLI. And FKLI has got a value of 25 ringgit per tick, so it's actually quite a huge contract because the value of the contract is roughly around 90,000. So you'll be investing something of 90,000 in terms of value, the market value of the index. So it fills the gap of a small contract available for traders and investors, and it's also enable investor to start trading futures because it's actually created in such a way. They call it mini contract. That means it's a smaller contract which allow you to trade the futures, all right, with easier to start kind of setup, and enable the investor to invest in the market. Last time you can say I invest in the market, but what do you buy? You probably buy a public bank, buy a Maybank, buy Bursa Malaysia, buy basket of stock. But can you really invest in the market? So this enable you to invest in the market or in the particular market, which we're going to talk about this quite soon. And it's also enable investor to use it as an index tracking fund. If you want to create your own fund, or if any fund manager wanted to create a fund tracking this index, so I call it like FBM70 or mid 70 stocks fund, you can actually make use of this futures index to trade like a fund. So which we call an index tracking fund. So let's talk about the advantages of trading this FM70. Okay, it fills a gap of mid-cap investment, which is important. Okay, because without this, you'll be only trading the big cap. But sometimes blue chip stock may be going up, but the mid-cap may not behave the same. So it's always has got a gap between the uptrend market and downtrend market of the underlying stock. The overall stocks. So this gives you an overall stock mid cap market share, and it's also actually gives you a complementary exposure to alternative or exposure to these blue chip stocks. So secondly, invest a basket of stocks or exposure, which we're going to discuss in a bit, and lower margin requirement. It's a mini contract, and you have calendar spreads and intermarket spread versus FKLI, which we'll discuss just in a bit. Now, what is invest in a basket of stocks? Okay, FM70 contract actually create an exposure to the stocks of the mid 70, which means if you buy a contract of FM70, meaning you're buying 70 mid cap stocks in the value of certain value. Okay, so you don't have to buy a lot of stocks. You just buy one contract, but you expose to these 70 stocks in one basket. So it's actually create a new world of trading, right? Last time, if you want to have all the exposure of mid 70, you have to buy 70 stocks. So you tell your remisier, buy 2 lots this, 3 lots that, 3 lots that, 4 lots that, to make a basket of 70 stock mid cap. But that will be a very tedious job. But buying a contract of FM70, you actually exposed to this 70, because trading FM70 is like investing the stock. So because the value is actually tracking the stock. So buying one contract of FM70 is equal to buy all the stocks of this mid-size 70 mid-cap stock okay, but without the hassle of to select, to analyze, to buy, sell, because all the individual stocks has got different time for their quarterly report, their PE ratio, and all this. You have to study all in order to really invest, right? But with one contract, you can actually eliminate all this hassle and focus only one, right? So because you invest in a basket of stocks, you lower the risk of drawdown. That means lose money due to one particular stock. Sometimes out of 70 stocks, one stock may just fell, for particular reason. But overall market was actually okay. Let's say, for example, so your risk will be spread to all components, because others will help. Because if you buy 70 stocks, if one stock fell, your particular stock will be falling, right? But if you buy a basket, so it will not fall so fast because others are still performing well. If you buy that particular stock, then you will actually risk of losing quite a lot of money. We'll show you an example of this. And also a quick entry to all 70 stock with a single instrument. This is really what I like actually. So for example, one of this day, one of the component stock fell. If you ask me, I may have not aware of why, the reason, the financial result, you have to check one by one and all this. So this particular stock, let's say for example, fell 22.76% in 2 days. Okay. So what happened to FBM70? The index itself is also going down. It's probably not 100% because of that particular stock, but because of overall market. You know the market is quite tumbling due to US interest and the trade war and so on and so forth. It fell 1.49%. So at the same time, one stock lost about 23%, but this total index is actually only losing 1.5%. So, but what about FM70? FM70 is a bit sensitive because it is a futures. So people trade because of the perception of the market of what happens next. So it actually fell 2%. Now, if you invest the same amount of value, okay, into FM70, your equity will lose. If you buy, let's say for example, if you buy, your equity will lose 2.21%, roughly, okay. But if you accidentally, because you thought of, buy mid cap, so I chose this particular stock, and this particular stock fell 20%, your equity will be, reduced by 23% for that 2 days. But if you invest in an index, you need loss 2.2%, which to me, as a full-time trader, to me the risk is always more important than what is my potential gain. So I always look at the risk. So that is one of the reasons you actually gain exposed of the total 70 stocks, but you don't have the pinpoint of, let's say if you one particular stock draw down, so your total portfolio will be affected. No, it won't actually, because it's a basket of stock, just like trading in a buying a mutual fund and so on. So with that, we move on to another important issue, is the margin. Now, margin is one kind of important informations, okay, of trading. If you trading futures, you'll be trading with a margin. That means we have thought about this, probably quite some time ago during some of our seminar. Trading futures is trading with margin. That means the underlying asset can be worth more than this particular asset. So each tick of this asset is actually spend a value about 1 tick of this particular index, FM70, is 2 ringgit per tick. So if you look at on the starting of this FM70, is at about 15,000 tick, okay, point. So that means 15,000 times 2 ringgit. That means every particular tick is 2 ringgit. So it was starting about 30,000. So investing in FM70, meaning you are actually buying a portfolio of 70 stocks, which worth about 30,000, okay, in this mid 70 cap counters. So, but how much money do you need to actually start trading this 30,000 worth of stocks? 800. In a way, you have some form of leverage, okay. Is actually kind of leverage that actually give you the advantage, okay, of trading with futures, because the leverage we talk about here is actually quite vast because it's equity index. So the margin required to trading FM70 is actually 800 ringgit. So with 800 ringgit, okay, you actually can gain exposure to a basket of stocks which worth about 30,000. So in a way, you are actually finance about certain amount of your value of stocks. But because trading in futures, the margin, you do not need to pay interest. But please bear in mind, the margin is where the risk starts. if you start with, let's say, trading one lot, 800 ringgit, which is equivalent to about 400 points, 400 ticks. So if you trade this FM70 and you lose more than 400 ticks, you lose all your margin. Okay, so sometimes people say futures is risky because you potentially lose more than money that you put in. But bear in mind, I always check this example. If you, let's say, put up 30,000 cash as the margin to trade one lot of index, that means you pay the full margin, or you buy all the stocks. You buy the stock, you need to pay 30,000 worth of cash, but you buying one futures index, you pay 800, and then you're trading 10 lots, 8,000, your margin. But if you actually try not to use 800 as your bare margin, but you can increase to 1,000, 2,000, or even 3,000. But try to imagine if I put 30,000 as my margin to trade this FM70, which worth 30,000. Will the index go to zero? Most likely no. So if the index won't go to zero, so is my investment will go to zero? No, also right. So you have almost zero chance this investment will go to zero. But you have the unlimited gain of this exposure. Let's say if the economy take off in the future, index will be from 15,000 go to 30,000. So you double your money that in return. So this is how futures works, in a way, if you actually do it correctly. Now, based on the circulation from BMD, the margin required for one lot is 800, right? And the spot month spread will be 200. I'll talk about spread later on. And back month spread is only 100. But I want you to also take a look here. For those who've been trading FKLI, you actually can trade one lot of FKLI and one lot of FM70 to form an intermarket spread, which you only pay 1,920 only to trade two lots. That means you long FKLI, you sell FM70, or you short FKLI, you long FM70. The margin you pay is by right 4,000 for FKLI, right? And then 800 for FM70. You only need to pay 1,920, not 4,800, because you will be given 60% discounts in your margin, provided you long one lot and then you short the other leg. You can't do both long. If you long both sides, that means it's not a spread, so it will be considered as two outright, and you have to pay 4,000 plus 800, which is 4,008. But if you long one side, you short the other side, okay? And vice versa, you only pay 1,920. So this is actually pretty important. To prove this, actually, I made a trade on this also, which I will share with you later on. And advantages, this is a mini contract. So a mini contract with 2 tick of value means it's easier for you to control the risk because the tick value is slightly smaller. And although the intraday range is big because it's 15,000, so the value fluctuator is about, let's say, maximum 200 points, which is what I observed. So, which is 400 day range. Okay, if it's against you, that means you may lose up to 400. This is actually not crisis. That means normal range. Okay, you somewhat has a limited risk. Okay, and it's a smaller contract suitable for any level of trader. I also trade. So people, with starting, without a mass major experience in terms of trading futures, you can start actually trading futures with this contract. And the intraday range is actually quite big. All right. So although most of the time I don't like a very big range, because bigger range actually carries bigger risk as well. But it has got about 200 ticks also range on the last day of last month, right? And the good thing is you have a calendar spread. So once something you have a calendar spread, that means you can control the risk, or you can hold contract and do a rollover. And calendar spread is actually very, very popular in CPU. It's also a contract from BMD and also FKLI trading. So spread is actually a strategy or tool for hedging, rollover, or pure trading wise. So this is a good starting ground to trade for anyone to trade this spread. Just to start with, because one lot of spread of FM70 is only 100 per pair, compared to CPU spread now is actually 1,200. So which is actually quite a easy market to start with. And now this is the important part which I'm very particularly want to share with you is, the intermarket spread. I always want to do intermarket spread. You have this in palm oil market, but they have a spread which is the palm oil but in US dollar, But this is actually in ringgit FKLI and ringgit FM70, and both will form the FBM 100. So FKLI can pair with the F70 to form a intermarket spread. This is a whole new spread trading strategy to enable trader to explore. So to illustrate this, actually what I did was last week I actually parked an order to long FM70, quite low, but I didn't expect the market can just suddenly turn the market around and hit my long contract in FM70. And then later on, there's no rebound, so I couldn't make some money and exit. So what happened? What I did was I hedged this contract FM70 by selling FKLI. So once I sell FKLI, it forms a so-called hedge position, which is an intermarket spread. And today I'm able to unwind this position in profit. So what I did was first I long FM70, which is totally wrong because today market almost fell 20 points, for FKI at one point. So what happened is I cover my FM70 at a loss. So you can see that from here, I actually cover my FM70 at loss nearly about 400 ringgit. Okay, but because I sold FKI on the last day of last week, okay, so since I sold and then this morning it went up and then it actually crashed down, so I able to actually make some money from FKLI short leg. So this intermarket spread only cost me 1,920 ringgit to hold from Friday to Wednesday today, okay, because it's 4-day holiday, 2-day holiday. So in order to give me worry free, so I hedged the market and also reduce margin. Because I don't have to pay 4,800, but only pay less than 2,000. But at the end, today when I unwind these two positions, I end up actually make some money. So this is how hedging and spread trading works. But you always find that one of your leg maybe lose money, another leg maybe actually make money. And if end of the day both actually in the positive, in this case is make about 300 bucks. So at the end, I make money, then I'm actually happy because I'm a spread trader. I always expect half of my trade is actually losing money as long as the other half of my trades will cover my profit and so on. So this is normally how I actually trade. But just to share with you, although the intermarket spread margin is 1-to-1, but according to one of the study by John Q from RHP, he actually did a calculations. The perfect hedge of FKI to FM70 is 3 FKI versus 7 FM70. So this will make a much better correlationship of these two contracts and give you a better hedge if you really into this kind of spread trading. So yeah, so why not do some studies? You see, with this kind of instrument or more instrument that come into play, this is how full-time trader actually trade. If we make use of different contract, we do some spread here, spread there, and then although the other direction is actually maybe not very good, but then you see, if you thought the market is actually bad, you short sell in the morning, the market went up, okay, before it actually crashed down. So the market won't move like you wanted to unless you have some leeways or some preparation to hedge a turbulent market. So spread trading or hedging position is actually give you higher chance of survive in this kind of market. So instead of you go cut loss, hedging actually give you opportunity to let everything settle down and then you see whether you are in profit or not, then you unwind in profit. So with this, I concluded almost all the advantages I've been trading for the past few days. on this particular contract because it's still relatively young. Okay, but I'm able to do some limited trades which I can share with you on this. Although I've been trading FKLI for some time, but the FM70 also still give me quite some excitement, okay, to start trading this local BMD product. Now, I try to be fair, so I think of a few advantages just to compare or for you to really compare whether this is something you might be looking forward. So the risk of leverage of trading, okay, and whenever you know margin trading means you trade more. I mean the contract value is actually more than what you put in. So you have to be aware of margin trading. So control the risk from here. So it's actually very easy. Just increase your capital or reduce your size. That means don't trade too. Don't be too excited and went in too much. That means you have 8,000. Don't go in 10 lots. You know it's actually risky trading this way. Lack of futures trading experience, because if you're not trading futures before, you may not be able to short sell first. You must buy before you sell. You know, if you're not familiar with futures, you may have this kind of issue. And you long and short orders are not normal for many stocks investor, because what's long? Why long? Why do this? And then let alone you long one FKLI, then you short one FM70. It's even more complex, right? So this could be a hindrance to enter into this futures market. But this is, you know, just as simple as driving a car. So once you know how to drive a car, this is actually you use it to become your advantage actually. So looking at an index instead of fundamental or financial result also give a totally different new ball game. Last time, if you invest in a stock, you look at the PE ratio, you look at the earnings per share, book value, you look at dividend yield, this kind of financial result. That means you book your time every time the quarterly result is actually announced, so that you check out the result and then decide to buy or not, right? But even that is not without flaw, because you may be ending up, you buy a stock at at the high, even though the result is good, but once you cut loss, the stock actually may just continue its journey is going up. So you'll be wonder, have you done something wrong? And looking at all these fundamental, it's no longer necessary, because you don't have to look at individual companies' financial result. You are looking at the overall market itself, or you don't look at the market itself because you look at the global economy cycle, that kind of thing, or you look at different angle. For example, I always have say that a lot of mutual fund will be tracking composite index, let's say for example local mutual fund, as a tracking benchmark. So whenever they can perform much better or better than the composite index, they will say outperform the overall market. So if index drop 10%, if the fund drop 5%, they say outperform by 5%. So you look at this, that means the index itself is actually quite important because it's at an benchmark index. But why not you invest in this index? Because in long run, the index is actually, if it's not better, it's probably at par or very similar to any mutual fund or any investment that you have been doing. So if that's the case, then you can actually look at index and invest in the index itself. But of course, you can't invest in stock index, but you can invest in the derivative market, which is the FM70. So with that, we probably have the basic idea of what is FM70. All you need now is to start trading it, because trading will give you the best, the learning that you wanted to. Because I always sometimes telling people, or my traders, you have to start trading, and the market will actually give you the best lesson. But of course, if you're not careful, you'll be punished by the market. So let's talk a little bit on the strategy. How usually I start trading? Okay. With this, I actually touch a bit on the FKLI first, because this is actually work in tandem with FM70. And I hope that if you start trading FM70, or you're starting trading futures contract or equity index, or you have been trading FKLI for a while, please look in this angle. That means I look at the overall market or overall picture of the product you have. For example, the FKLI now compare with F70. This is the angle that you need to look into. Now, here now I have in a strategy, which I'm just use a very simple strategy, which I share in the previous webinar. I'm just using stochastic crossover to buy when the crossover at 10 and to sell at 26%. So it actually gives quite a good return, but this is purely backtest. Okay, as we disclaim, don't trade. If you lose money, don't sue us. But it gives an idea. You should actually test your trading idea, because most of the time that you actually probably look at certain idea how to trade. Then once you see it makes money once or twice, you believe in this strategy, it works. But it's actually not so simple. But as long as you have an exit plan, you have a strategy, then it's actually workable. So I'm giving you that I can actually backtest and give you a very good result. But then when you're actually trading it, it's actually not necessarily follow everything exactly like this, because the market may change. Global issue may just change. You'll be making 10, 20 trades are making money. Suddenly, US may announce increased interest, or they're canceling. Okay, so it will actually cause your trades to lose money. So this is ideal situation, but how many people can follow this kind of strategy in long run? Believe me, it's very, very difficult. All right, so you have this strategy, but when this strategy doesn't work, either you're trading FKLI or FM70, then you need something to hedge. How to hedge? Either turn it to spread trading. But I think most people will be difficult to trade spread because they have no knowledge on these two products. But why not you turn your spread into an FBM70 spread, which is FM70. I also created a strategy to test whether the trading system works for it. All right, I give you some clue how to build this, but I'm using a software which is freely to download called Ninja Trader. This gives a quite good. Okay, first thing first of this 70 I created strategy I created for FM70 because we do not have a very long history of FM70. So what I'm creating is based on FBM70 index. Okay, so this is the result, quite positive. All right, but don't trust me yet. Don't trust me yet. Okay, now the strategy I'm using is actually just an EMA crossover also compared to previous month. It's actually able to generate some profit, about 60% profitable. The result you can review this video. The result give you such setup. It has got high chance of making money in terms of risk and reward ratio and so on and so forth. Okay, it makes it a tradable index. You can actually buy and short sell the index. Okay, now, okay, this is the way I present this in my chart, but this is actually not relevant because this is actually an EMA trend following system, which if you actually calculate, should I cut loss, how many points to cut loss? So roughly I give you some idea. This is using EMA 5, okay, and EMA 15. So the maximum loss is actually 1%. That means you don't lose more than 1%, which I always recommend doing this kind of risk strategy. And the profit target is actually at 14%, quite big because trend following. So the rest is actually not used. So these are the main element that I use in my backtest strategy. But for test, then you need to really do it yourself, okay? Because you can paper trade, you can actually live, trade it. For me, I will be put real money to do a real test. Okay, now having all this strategy, it actually doesn't guarantee profit yet. Okay, first thing first is how, when you're losing money, can you do it? It just give me an idea whether this index is actually tradable or not. Because you may actually backtest and then show that these backtests are you cannot trade and make money, then why should I? Because if my backtest also show me almost I have no chance to make money, even using the computer without emotions, it's hard to make money. So I wouldn't test it. But these two indices actually give me quite promising result, but at a risk, because as I said, sometimes trend following you need to hold position for quite a while, right? It could be like days, even week. Okay, so you will have the risk. Sometimes the market will, just turn against you, and then at the end you don't make money for this round. But you have to consistently believe in the system and do it continuously, or you hedge your position when you are not making money, or you start to have a losing position. So now with these two contracts on hand, you can choose. You can start with FKLI, which make bigger money, more margin required 4,000, and per tick is actually 25 ringgit. All right, or you can start with mid cap. Okay, the mid cap will be starting at 800 only. Okay, 2 ticks per 2 ringgit per ticks. So with this, actually it gives you much better chance of trading and survive in trading. So this is how I strategize myself to trade these two contracts. Now, moving forward, before I really end this short webinar, is quite important. Usually, I'll just make myself always clear in this is, dilemma of trading. You may actually, from a system, it shows that it makes money in my backtest. Why, when I trading real money, I lose money? Because you're always in a dilemma. You try to curve fit the system. You build a system that works for this particular long-term trend. But once you start trading and you enter in the second phase, which you start to have a losing phase. So how to avoid before you really become consistent and believe in system, believe in yourself and trading and so on and so forth, you need to have certain time for you to experience all these ups and downs. So trading system and strategy can be very good looking in backtest but fail in the live trading. This is the fact, okay? And someone can be winning just because of luck and also without fear as a beginner. It is so easy for a beginner to make money. And why after the luck runs out or the strategy fails, they lose money. And then why after that they can't trade? Because they start to learn the risk of trading itself. Then they have fear in trading. It actually forces them cannot perform well. But in the beginning, because you have never seen you could lose so much money, you have no fear, trading becomes easy, So that is certain thing that you have to, take into account. So a long-term business or trading business cannot rely on all this, luck, fearless, that kind of thing. So also you have to look at these 4 important elements. I think I've been repeating this over and over again, right? So which I want you to really understand. This is the core linear effect. Okay, you use so many indicators, useless, because it gives you almost similar signal. And confirmation bias, look at this signal, it's make money. CC Young showed me the system, it makes money with 5 and 15 EMA. Don't just copy, because you need to actually have a series of your own system, all right? So look at your eyes, naked eyes, you see, every time I see this, it will go up. It's actually no, because this is just a confirmation bias, which you ask yourself to see things that you wanted to, and all optimize. People will try to create a system that 90% make money, from a backtest. It's actually not going to work because you over optimize the system. And curve fitting. Curve fitting is the worst thing happens in any system trader or any way you try to create a trading system. But if you not try to create a trading system, it's even worse, because you don't know how to start. You just with a gut feeling to trade. So this will actually give you even higher risk to start with, right? So with this, I actually introduce a simple risk management, which you must have before you start trading this. Just a simple one we'll also do is you have a risk control of your trading account, because this is the center of all successful trading stories that you hear. Okay, control the risk exposed in every trade. So how to control? To me, limit loss, your losing trade to not lose more than 1% of your equity, which is you see in here. Okay, if you see this 1%, the maximum loss, this is what I'm talking about. So I put 1. It's actually I test 1 to 3, but usually my result that, you know how I learned this and I believe in this because of the system that I practice. Because I put 1 to 10, 15, 12 also, it will always give me only the 1% is the best that you can actually make money. Or maybe my system is so lousy though, so that I wouldn't have a higher risk, chance, to expose a risk. So control the risk, use 1%, and trade with the money that you afford to lose. This is actually essential to make you able to continue in this business. Now, with this, I also want to introduce you to another contract, which because of it's a new contract. There's some trades done in FM70 spreads, but it's going to be important, especially towards end of the month, because there's a rollover. And do you know that one of the star trading instrument in Malaysia is actually spread trading? I've teach some students from overseas, they actually find that this is actually the instrument that they're looking for. So the star, of course, is CPO and the FKLI, and now the FM70, we also have spread. So make use of this as a starting point, because the cost of trading FKLI may be slightly higher for any level of traders, but FM70 gives you a much better exchange fees and brokerage. A lot of brokers, as far as I know, is actually giving some incentive or some discounts, in commission to trading this FM70. So spread trading has a nature of, lower risk and higher survival rate. This is actually undoubtable. You can ask any of your broker, they will actually tell you most of their trader probably survive much better with spread trading. And this has been adopted by many professional traders around the world, actually, not only Malaysia. Malaysia, I know a lot of traders are trading spreads and also scalping. But to me, I always believe that you can actually invest in futures index, equity index, which I'm sub trading this FM70 as one of these. So that means I can trade stocks, but without looking at stocks already with this FM70. And when I hedge, I could actually hedge by selling FKLI or long FKLI, which I just did and showed to you. It works this way. So of course, if you want to know more about spread is quite a new and complete topic. So it creates even more strategies from a plain directional, up and down. So spread trading actually don't care about up and down. Spread trading is actually totally different ball game. So this is besides trading the outright directional of an index or commodity, another form of trading is actually spread trading. So you don't trade, you trade up and down both together. But this kind of trading contributed a large volume in trading, especially in our local market. But less known by a lot of basic traders. So I think probably me and my company is the only one who actually actively coaching the spread trading. So we have some webinars with previously in recorded. Okay, if you want to find out more about spread trading, because I can't finish spread trading in probably one day, you can request a recorded webinar from my website, www.straitsindex.com. You can register and request there. So we send you a link requesting the webinar so that you can find out more about this. So with this, I'll pass back my control. I'll end this session, but I'll be ready for any Q&A. If you do ask me, about FM70 and anything that I've been presenting over in the past 1 hour. Okay, back to you, Shane.
Thank you very much, CC. So if you want to learn about spread trading, can go to www.straitsindex.com, and CC Yong is definitely the best expert in Malaysia to talk about spread trading, and he has a recorded webinar, and I think many people who attended the spread trading webinar found it very useful. So you can, if you want to consider spread trading, please definitely, he is a must-go person. Okay. Now, now I want to open it for question and answer sessions. So if you have any question, please type it in the question box. All right. So the first question is, will the FM70 price be the same with FBM70 at the end of the month?
Okay, it should be very close. I'm not expert in calculating the index final settlement. I believe BMD has got a department to calculate. It's usually very close. The market itself will automatically move towards both index FBM70 and the FM70. But my experience is sometimes they have 1 point, 2 points, or even half a ticks or half a point, but of course FM70 don't have half points in FKLI. That means 1 or 2 ticks difference, it could be there, but it will be very close. So your final settlement, if you go for settlement, so usually you may gain 1, 2 ticks from the actual FBM70, or you lose maybe 1, 2 ticks from there. But usually it wouldn't be very big lah. I mean, they have a small gap, but you can actually ignore it. But during the month, when the market fluctuates, it could actually more than 10 ticks, 20 ticks, this doesn't matter. But end of the month, the gap is actually almost, you can actually ignore it.
Okay, thank you so much, CC. So the next question is FBM70 Sharia compliant?
Good question.
My guess is it is not because KLCI, FKLI is not Sharia compliant.
Yeah, they have another
My
Sharia compliance index, but I think the FBM series, which top 10, the T100 and all these 30 plus 70, they are actually categorized by in terms of market capitalization. So they are actually not take into the Sharia index into account. But I might be not the best person to answer this 100%, but I guess it's no agree with you, Shane. I might be no, but I think this you can always find out by sending an email to BMD actually.
Okay, yeah. Next question is 1-to-1 a right hedging ratio?
Okay. As I said, my friend John Q, he tested is 3-to-7, 3 FKI 7, which is a perfect 0.95 correlation. But what I did was 1-to-1, okay, and this is what the Bursa margin is calculated based on 1-to-1. But I got lucky. I long FM70, I short FKLI, and I know the market is actually tumbling. I went and long FM70. Stupid, right? So I tell you, spread trader is actually you almost can challenge us to go into any direction, because we always have another leg to hedge. That means if I long is wrong, that means the short will be correct, right? So that's what I did. So I long FM70. I feel like it's not going to rebound, because suddenly the whole world looks like, wow, something is wrong. They talk about interest, they talk about trade war. I don't know whether correct or not. It has been a while, but yeah, the index actually did fell. But what happened was, when I sold FKLI, the market actually went up a bit, which, okay, obviously that's how I sold it. And then this morning it went even slightly worse. But at the end of the day, because FKLI dropped much more than the FM70, so I make money. Your question is 1-to-1 whether it's perfect. I think hedging this way, you're not going to get a perfect hedge. But since one lot of FKI is actually only 4,000 and FM70 is only 800, so let's say for example, you shorted FKI one lot 4,000, right? Then it went up, so you long FM70 for example, one lot 800 only, but then it's not enough, so you long another one lot, which is 1,600 to 4,000. You still have actually total of 3 lots or 5 lots total to long to make up the 4,000 to 4,000 in terms of margin, to make up not a perfect hedge, but to help you to recover. So this way, you don't have to cut loss either one leg. You only cut when both leg, the result of both leg actually give you a positive result. So this is how we're trading, okay. So of course, FKLI, if you long FKLI, you can actually, let's say you long September, you can actually short October also. That's actually another form of spread called calendar spread. But I would say if you want something more complete, you can actually try. Of course, you can sometimes the market is bull run, you don't have to short any side. You just long FKLI or you long FM70. Depends on which one you're more bullish, or you long one side first. Okay, don't try to long both unless you're so sure the whole market is actually bullish. Try long one side. If you're more towards bullish bias, you long FKLI because this is the biggest contract or biggest cap. Okay, you long this side. If it's wrong, then you start selling FM70. If you are more on a bearish side, like recently, so you can short FKLI first. But my case, I long FM70 first because sometimes the market just go against everybody, right? So I went and ventured into FM70 long first lah. I wanted to sell, but it doesn't hit my sell actually. So then when it's filled, the market doesn't rebound as as usual. So it went even deeper. So I have no choice to sell FKLI. So no perfect hedge yet. It's difficult to get a perfect hedge unless both are the same contract. Calendar spread will be one lot long September, one lot short October. But in this case, you almost get a good hedge, but something that worth 9,000 versus something that FM70 is 30,000, right? So you can actually long or short one lot FKLI against 3 lots, or following my advice of my friend John Q, is actually 3 lots FKLI and then 7 lots of FM70.
Okay, so that is the expert advice 3:7.
Yep.
Okay, now the next question is how to identify between calendar spread and intermarket spread.
Okay, in this case, a calendar spreads maybe you can see that in your quotes, you will say CS, calendar spread. In short abbreviation, is calendar spread is CS, SP for spread. So CS. So usually they will say FM70, CS, September, October, and so on. Intermarket spread is totally different quotes. You have to call out FM70 and also call out an FKLI quotation, and you do a long and a short in a different market. So that's form a hedge. Let's say you can long bean oil in US CME, and you also can short FCPO, which is our palm oil. So you need 2 different market and 2 different direction. That is intermarket spread. Calendar spread is in Malaysia, you don't have to do it manually. You can do it directly with the calendar spread code. But if you want to do it manually, because let's say you long FM70 September today, but today is falling, you can short October FM70 to form a calendar spread of FM70. So once you form a calendar spread, you hedge the position. So if let's say FM70 September you long, right? You lose 200 points. But if you hedge, you may not lose 200 points. You may actually make maybe 5 points, 10 points, And the margin of this spot month spread is actually September and October. It's only 200 ringgit. So instead you pay 800 for one outright contract, you only pay 200 to hold it overnight. So this is actually a form of strategy. If you're trading a hedge or calendar spread. So in short, calendar spread is actually same instrument, 2 different months. Intermarket spread is, it can be any month, but it must be a different market. It must be an opposite direction. Calendar spread also need to be opposite direction. Spread is always opposite direction. So that's pretty much explain how you do it.
Okay, so there's one participant who feedback that CC the registration form for your webinar is not working.
Really?
Yeah, so you need to fix that. I think there could be some error or bug there. Okay, so maybe they want to register but can't. There's one comment here.
All right.
Yeah. All
I'll
right.
look into it.
So the next question is, which back testing platform you can recommend us to use?
I'm using a software called Ninja Trader. You can Google Ninja, Ninja Trader. It's a free software. I used that for a few years, so that's why I stick to it. The good thing about this software is that it actually gives you mouse point click. Actually, our previous webinar, we have actually gone through how to do a simple strategy. You can follow back, the webinar previously, which shows you how to do it, and I hope that will help you. It's a free software. You can download some indices they provide free also, or you can import your own data from your software or whatever. So that is actually helps you to start building your own strategy. So once you're confident, you can actually do any strategy that you want. But it's very good learning platform because first thing is free, and a lot of community forums that helps you to move into backtesting. So yeah, I recommend to use Ninja Trader.
Okay, thank you, CC. The next question is, what is the commission rate to trade FM70 per trade, both intraday and overnight?
Okay, commission rate. There's two parts. Okay, the reason I'm not the best person also to explain because probably because the volume I'm trading, the rate I'm getting might be different than yours. But I did study some emails sent by brokers. It's ranging about 10 ringgit or 8 ringgit per site. Okay, to trade this product. I'm not sure. Probably later we will have a broker also to explain to you what is the rate they're recommending. But your volumes actually does justify how much they are charging you. But this FM70 is actually a new and also a smaller so-called mini contract. I hope that you can bargain and negotiate to get a very good rate. It's supposed to be much lower than any ordinary contract. But I leave this negotiation to you to negotiate with your broker. The reason is I think the ranging from $10 plus minus of $10 is advisable, but if possible, try to negotiate much lower, which will help you to improve your trading a bit. So of course, you also can get some incentive from BMD. You can contact BMD anytime. They can actually probably recommend you to, if you trade in terms of volumes, they can actually recommend you to join certain incentive program to help you to reduce the cost of trading.
Okay, thank you so much for this. To me, also getting a trader that offer you a good rate is advisable, coupled with a good trading platform. So the next question is, with only 2 weeks data on FM70, can we do back test?
You can't. So that's why I was using FBM70 data to actually backtest the system that I just proposed to you, which is 5 and 50. Don't follow, okay? But yeah, it's tradable. It just proved that it's tradable. That's why I'm actually trading it now. Yeah, so instead of using the FM70, so I'm using the stocks index, which is FBM70, to do the backtest actually. Shane?
Yeah, sorry, I forgot that I did not unmute myself. Yeah, I was talking. Anyway, now I unmute myself. How much is your 1%? As your 1%, maybe you have 5%. Would you?
Sorry.
I think the person who asked the question is because just now you talk about 1% risk, right? I suppose is asking your 1% could be 5%. So how do you do the 1%?
Okay. Sorry, I could be because done this, in the previous webinar, so that's why I might be run too fast when I'm explaining. Okay, the 1% I mean is actually when you go into one trade. If you have an account of, let's say, 100,000, okay, 1% means 1,000, right, from 100,000. So that means you go into one trade. Let's say you short FM70, supposed to make money, right? But end up you may not. You may need to cut loss. So when you consider to cut loss is when this particular trade is actually losing 1% of your account, which is 1,000. If it lose 1,000, cut loss. So if you have a 50,000 account, so 500 is your cut loss point for this particular trade. So that is how what I mean for you to justify when to cut loss. But the cut loss of 1%, it can be 2 lots, 3 lots, it can be 100 ticks, it can be 5 ticks, depends on the size, position. But to make it easier, so I put an absolute amount of 1% from equity, which it can be equivalent to 100, 200, 300, or 10,000. So it depends on your equity size.
Okay, so ultimately it's all the equity size that matters lah. Huh?
Yes.
So how do you time the trade for spread trading? That is the next question.
Time the trade. Okay.
Yeah, trade. Maybe the question is a bit more simplified. Maybe you try to guess what is asking.
Yeah, it's quite a major question to answer, I think.
Wow,
okay,
big question.
Maybe
but you can summarize it. You can summarize it because we only have 15 minutes left.
All right. It's something like, let's say if you're trading FKLI, every month, the last week of the calendar month, the spread trading will be very active. The reason is because a lot of hedgers, they actually, or they are big spread trader of regional market, Asia market and all this. They will have a lot of contracts. It can be like 50,000 lots they want to roll over. So the spread can be very, very active despite of whatever happens. So they just roll at 30,000 at one side, 30,000 on the opposite side. So this kind of trades, so to time the timing correctly. So yeah, the timing could be the last week of each month, but you only have one rollover, so which is on the final week. CPU, the rollover usually happens about the middle of the month, which that is the certain timing that you can take into consideration. But maybe more specifically, your question is how to time, long and short day. It's something that spread trading can be simpler than this actually. So far when we joke among ourselves is we can go in long or short either way, either time. So I can be long today and then short tomorrow, to protect my position, as long as you know how to hedge. So timing, it could be very important, but once you enter into spread trading, you can slowly reduce the elements of timing. You reduce the effect of the elements of direction. That means the direction won't affect your trading so much, and also the timing won't affect your trading so much. So that is actually the whole game of trading spread. So I think I can't answer it pretty straightforward on the timing side.
Okay, yeah, understand it. The next question is, which are the top 10 counter and what is the weightage in the FM70?
I don't have the list. The top 10, of course, the usual suspect of 30 is like Public Bank, Maybank, CMB, the big counters, all right? And then after that, there are the number of counters which the usual suspect that you can see their face quite often. You may need to Google a bit, to get the list. I don't have the list with me here, but honestly speaking, I trade the FM70 without really knowing which counter is which, because it's a futures and it's a hedge trading. So
you're not an investor, so don't need to care about that.
yeah, no, not really. As long as
So,
I
okay.
have the FKLI as my hedge, so I can trade FM70. You see, this is the mindset of a spread trader is, I have FM70 as a new product, but I have FKLI as my hedge. I think that I can trade. So that's how I enter into one trade.
I see. Okay, so that is a strategy. Now, the next question is, do you have any idea why the gap between the bid and ask for FM70 is so big?
Okay, because it's relatively new contract. The bid and ask that you can see, sometimes it could be from a market maker. Market maker is the liquidity provider. Usually, it's a hedgers. It could be a bank. It could be someone who trading stocks. They can offer the bid and ask. So of course, the market maker need to have certain buffer in order for the market for them to perform well in terms of the nature of this business. But please, I know that a lot of people has got a bad image of market maker. Actually, market maker don't make you lose money. The market maker is a good guy which provide the liquidity for you. When you want to enter the market, he's there to provide you whether you want to long or short, and it's always providing the liquidity. And then why it's so vast? Because of, as I said, they need to calculate every movement before they hedge, let's say FKI, how much this index has moved. So they have a formula to calculate. So that's why you see that the movement of this is actually automated. And also, let's say I'm trading FM70 also, I wouldn't park so near, because the price hit 2 ticks, you won't make money, So you need to park like slightly better range. But as more and more traders are trading, just like FKLI and FCPO, the gap or the spread of this bid and ask or bid and offer will be reduced to be a smaller and smaller range. This is actually depends on how many participants is actually trading it. So don't be so alarmed, because the contract itself is actually 15,000, compared to FKI is probably like 1,700. So it's about 10 times, So that means moving 1 tick in FKI, you can actually move 10 or more in FM70. So don't be alarmed. Observe the contract closely, and then roughly you know where and how to park it actually.
Okay, thank you so much. There are still a number of questions on my screen, so CC, you gotta answer them really brief and fast.
Okay.
Okay, so similarly, does the FKLI and FBMKLCI close gap at the end of the month or not?
Yes, they does.
Okay, they close. So it will be very similar when the contract settle.
Yes.
Okay, so how common is FBMKLCI? Sorry, how common is FM70 move in tandem with FKLI?
Actually, they don't really move in tandem, but overall they are. But intraday wise, you can see that one go up, the other one maybe go down a bit, then this one follow, this one maybe rebound a bit. So they always in a seesawing. But the overall trend, like they were going down lower and lower, but they are not really exactly the same moment. So yeah, then it actually creates opportunity for you.
Okay, all right. So they are independent of each other, So the answer is. Now the next question is FM70 about speculating? How to do analysis?
As I said, if you want to invest, you just invest like a stock. But then now the market is bad overall. You want to sell stock, right? But you don't have stocks. So sell FM70 lah. Then you're actually exposed to a short selling scenario. So whether it's speculative is actually relative. Okay, if you have no knowledge, don't know what to do. Okay, you have only 800 ringgit, then you long or short FM70, you're actually speculating or even gambling. Speculating is actually not bad. In a way, most of the traders are speculating. But if you speculate based on certain age, okay, then you are trading. So what is the age, risk control and all this add in? You actually improve your age a bit. Then you are no longer in that pure. I know people have speculating it could be a bad word because it's like gambling. It's actually no. So yeah, if you ask me, speculative, no, because it must actually move towards the FBM70, okay, at the end of the day. So it's actually still a stock-backed equity index. So it cannot be a speculative by nature. But in between the month, yeah, you can be very speculative, but at the end of the month, you must back to the fundamental. So to me, it actually can be speculating, but it's a equity index. You need to back by the fundamental of all these 70 counters. So you can treat it as an investment structure, or if you go in blindly, then you are gambling lah. So the answer is yes and no.
Okay. The next question is, if you're wrong in one direction, why you still hedge instead of cut loss?
Good question. Actually,
I also think it's a good question.
Okay. How many of you have been trading long enough? Let's say, trading 100 lots or 100 trades per day, and if you cut off 50 times in a day, or let's say in a month you cut off 50 times and you make 50 times, will you be happy? Will you be frustrated? Let's say, for example, if you buy a stock or long an index, it went down, so you cut loss. The moment you cut loss, it reversed and went up. You make 10 points, 20 points. Will you be frustrated? How many times you can survive this kind of frustration? For me, I can't forever, survive this kind of negative emotion. But hedging gives me an edge, which I don't have to cut because the market may move back to my favor. But I need to protect my position. That's why I do the hedging. This is the whole idea why I hedge rather than I cut loss.
Okay. So what do you mean by rollover at month end?
All right. There are traders who will actually long a contract of September, but at the end of September, the contract will expire in futures. So once it's expired, you can't hold the contract anymore, but your position can be losing money, right? So what you do is you can roll to the next month. Okay, once you roll to next month, that means you roll from September to October, and you are actually able to continue to hold the contract. So rollover is actually close your spot month contract, you open up a same direction at your next month contract.
Okay. Now the trading volume is very thin and low liquidity for FM70. Can we get in and get out easily?
I can. I just proved to you in my slides. I'm able to get out despite it's not as liquid as a lot of let's say like palm oil. But yeah, you can actually get out your position. Of course, if you hit bid and take offer, you may lose like a couple of ticks more. In FM70, you talk about a couple of 10 ticks, or 20 ticks or 30 ticks more. Yeah, but you still able to get out. If you wanted to.
Okay. So the next question is, how do you view the divergence of prices between the cash market and the futures market?
I don't think I need to discuss. Study on this because it's sometimes just too complex and too biased. To say futures down first, then the stock will come down, and vice versa. It's actually to me, I just disregard this information. I wouldn't really bother about this. No.
Okay.
Last time I do really did a study on this and all this. I find out actually.
But this is not that important. It's very trivial.
Not important.
The next one is volume a good indicator for price movement?
Yes and no. For futures, I think also you have to ignore that as well. Because especially a new contract, you don't have the value information on this. But in stocks, I'm sure we do analyze this, but it can be useless also sometimes. So to me, I'm not in my system backtest that I don't really use volume as one of the elements. No, to me.
Okay. Now, how do you set profit target for FM70? Like, do you set how many ticks, or or how?
15% from the system I tested. I didn't set it. I allow the system to tell me what is optimum profit target point.
Okay. Now, are FM70 and FKLI positively or negatively correlated? I think there's a follow-up question from the other answer that I gave. Are they positively or negatively correlated, or or the relationship is not clear yet?
To me, it's not clear yet because I haven't trade long enough. But it's actually close. It's actually close, but not 100%.
Yeah, just think of it like the S&P 500 and the Russell 2000.
Yeah. That's right.
Just think
exactly.
of it that way,
Exactly.
Sometimes when the bull market is strong, then all stock market will go up. Okay.
That's right.
But sometimes it will go the other way around. Now the next question is futures trading a zero-sum game?
Not really to me. Because many of my orders are fills when I'm trading futures by a very big order. So I assume people that can throw in 500 or 1,000 lots in futures hedges, or there are those futures mutual funds hedges and all this. So these are the people actually need us to provide liquidity for them to reduce the risk or get out of a position and all this. So it's not quite a zero-sum game, as in one people make one bit, another one break. But of course, the one that who break in our market, he could be the one who make money in the other intermarket. So to me, if you trade it correctly, you'll be the one who always travel in your own instrument, and you let other people who actually throw in this position to you to make money on another market. But those who don't trade with proper risk and hedging tools, that could be a problem. But whether it's a zero-sum game, if you take hedges into account, we are actually helping the hedgers in long term. So the hedgers lose money, that means their physical side will be making money. So I would say, yes, it's a zero-sum game if you talk about the dollar and sign. But those who lose money to you may be actually making money in another market. So probably you don't have to worry about that.
Okay, that is a zero-sum game for you, huh? All right, cool. With that, I think there's no more questions on my screen now.
Oh, that's
so good. I want to thank CC for spending your precious time with us. But while CC will spend some time maybe looking to the bug at the registration form for the recorded webinar, do check back maybe tomorrow or the next day, or maybe you can email him. What is your email, CC?
You can email to info@straitsindex.com. info info@straitsindex.com.
Email to info@straitsindex.com.
But all my contacts should be in my website, so shouldn't be.
Just tell them that you want to register for the recorded webinar. So when the link is ready, the admin will send you the form again. So for you to fill up, or they can help you to fill up even that. Okay.
Yeah, sure, no problem.
So with that, thank you so much, CC. But before that, we also have another promotional offer that we want to make for you. CC, if you allow me, I will just take away your presenter control and give it to another speaker today, which is Nancy. Okay, so I'll take away your presenter control, and thank you so much for your time, CC.
Thank you.
See you again in the next week. Okay.
See you.
Yeah. Before that, while you're still online, everybody, please, I'm going to introduce our next presenter. Okay, Nancy, I'm giving you the presenter control. Can you see it now? Yeah, we are seeing your screen now, Nancy.
Hi, everyone.
Yeah, we can hear you loud and clear. Yeah, hello.
Hi, everyone. Let me just
You just click the full screen. Now, as you know, this webinar series is very generously sponsored by Bursa Malaysia Derivative, along with CIMB Futures. So today, if you stay on, you are going to get a special offer from CIMB Futures. For those of you who are asking about low rate or a credible trading platform, I think CIMB is one of the best brokers that I've come across that can deliver the kind of service at the kind of rate that you are looking for. So with that, without further ado, let me hand it over to Nancy.
Hi everyone, I'm Nancy and I'm from CIMB Investment Bank. I'm a dual licensed dealer which I have been trading with futures and shares for the past 15 years. Here, our first slide today will give you a quick glance of what CIMB futures offer as compared to the industry. For the FKLI, intraday rate is 10 ringgit and FCPO is 7. And for the overnight rate, FKLI is 13 and FCPO is 12. And as many of you may ask about FM70 that is the subject of this evening, and we are having a promotional rate of RM 6 ringgit for overnight and 5 ringgit for intraday. As compared to the industry, the average offer is about 15 to 20 ringgit per contract. And the offer that we are offering to all the audience for the webinar that sign up today is a special offer, and which is our floor rate, and the rate will stay as is. And in terms of trading platform, our iTrade web and iTrade mobile is free of charge, while others may have some system costs which you may need to commit a number of trades in order for you to get waiver. And we are frequent in terms of clients rewards campaigns and seminar, which we will cover more in our subsequent slide. And our monthly fundamental FCPO reports here for those people that trade on FCPO is written exclusively by CIMB Research, while others it may be prepared by the company desk itself. So the reports that we are sending out is actually prepared by the analysts of the plantation sector. Here, we will give you a quick glance of why should you trade with CIMB futures, which is we have the investment bank branch nationwide, professional advice, complimentary trading platform, and mobile trading. And we will cover each and every one of it in greater details later. And we have big rewards campaign, research rewards, award-winning 24-hour dealing desk for those that trade on the futures on the foreign market, and we offer competitive rates. Here is the location of our CIMB Investment Bank branches that we have office from the north, south, east, west of Malaysia. In terms of trading platform, there are two online platforms that we are offering. The first one is iTrade CIMB, and also we have iTrade Pro. And if you are outside, you can trade through our mobile apps. For our iTrade CIMB is a web-based trading, which you access through our website www.itradecimb.com.my. The system is free, and it is very easy and simple for you to operate. This is how the trading page looks like after you log in. As you see that one can easily locate the buy sell button. Okay, once you click on the buy sell button, the order form will appear and it will change accordingly to your order actions. And you can check your order under order book, and you can cancel your order, you can change your order, and you can even check your net positions and cash balance under portfolio screen. And for those that actually, if you want to put on a stop order or stop limits order, and you can actually refer to the order forms here under our order types, and you can actually work on a GTC or GTD order. So it's very simple for you to start trading. And as for a new beginner, iTrade CIMB is good enough for you to start with, where the system itself incorporates charts. The chart itself is a live chart, but it's not streaming. That means you may need to refresh in order for you to get the latest candle. So if you are reading on the 5-minute charts, you may read up to the last 5 minutes candle. And if you are reading on the hourly charts, you may read up to the last 1 hour candle. And the charts itself come together with the standard indicators where you can put in your moving average, RSI, and you can customize it to make your indicators more sensitive. And you can actually save your chart settings. So every time when you come back, you have your technical analysis right on your charting page. When we are talking about iTrade Pro itself, is actually sorry, let me go back to the page. iTrade Pro is actually is an application base where you need to download and you need to do some system setup. The system itself is chargeable, where it's about 188 per month, and we give waiver for those that trade more than 500 gross brokerage per month for 6 months, and it is being actively used by the active and sophisticated trader who need a professional charting instrument. This is how the iTrade Pro, the system will look like, which you can actually customize your charts. You can have a multiple charts window if you are reading on a different time interval, like you are reading on the weekly chart, daily charts, and 5 minutes to 30 minutes chart. So it's all under the same screen. And if you have 2 monitors, you can actually project the screen into 2 screens, one screen for shares and the other screen for futures. And for our iTrade Web and iTrade Pro is all under single login, where you can trade your shares and futures under the same login. Funds are transferable within the accounts. That means you can transfer from shares to futures, futures back to shares account. And if you are outside, you can actually download our iTrade app into your smartphone or your tablet, and you can trade at any time, anywhere, and the mobile app itself is actually free. Next, we have campaign. Both our existing and new client can participate on our Big Rewards campaign. The campaign is actually started in April this year, and is all the way until December. How it works is that we will total up all your commissions from your shares account, your share margins account, futures, and cross-border trading, and we will reward you accordingly. The prices is actually ranging from a shopping voucher, petrol cards, to the luxury watches like Omega and Rolex watches. And we do have clients that receive Rolex watches, and they are happy customer now. And the campaign itself is very straightforward in a way of rewarding our existing clients. And it is very easy for you to participate, whereby you only need to sign a form for you to take part. We will send out the daily research, daily commentary for futures, FKLI, and FCPO every morning before market start. And your iTrade login is accessible to our CIMB research, covering both local and foreign markets. Those are the fundamental and technical reports. And we are honored of the recognitions of Bursa Excellence Awards year 2017, where our iTrade platform received the best online retail participating rewards. This is the 5 continuous years that we received the same recognitions from Bursa Malaysia. And the rest of the rewards are year 2017 best retail derivative trading participant second runner-up rewards. And you can click on our iTrade website. You can access to our iGateway. It is a knowledge portal where we constantly update you with the latest market informations, trading video, and the latest events. The one that on screen is actually the trading video for FKLI and FCPO we uploaded every week. And you can download our daily reports for the local futures and global futures every day. Both the trading video and the newsletter are the technical reports, where we guide you on the latest market movement, and also we also share you with the trading strategies. And we are very often educating our existing client in terms of the market knowledge and all that. One of the frequent workshops that we used to have is called Market Intelligence Workshops. We have it every Thursday, first 2 Thursdays of the month at our PJ office. Okay, and for those audience and participant of this webinar, we have a second goodies for all of you, where if you sign up with us, we will offer you a 6-month TC Pro waiver free for you, all together with the special promotions that we offer to you today. So we give you a very good support and encouragement for you to start futures or an alternative for you if you are trading on the futures, this is a very special and very good offer which you may consider to join us. And here are our contact number, which you may reach myself or my teammate Li Xing. You can reach me at my mobile number 012-640-2601. You can even email to me. And if you have any, you can come forward to us if you want us to assist you in account opening, or you may have some private message that you may want to ask us directly. So that ends my my session here.
Maybe Nancy can go back to your previous slide, which is your contact details. Okay.
Okay.
Right. So I've just put in your contact details in the chat box, nancy.tam@cmb.com, and also your contact number in the chat box. So for those of you who are staying online today, if you see that this offer is good for you, please contact Nancy right away. I think do you mind to contact you in 10 minutes?
Can, no problem.
Yeah, you can call her in another 10 minutes, and she will make arrangement with you to sign up account to help you to assist you with all the paperwork. And for my understanding, CIMB is really one of the best brokers because they win awards every single year at the Bursa events. And in LifeChamp, we only want to work with some of the best brokers. Okay. Okay, so that's why we work with CMB to make this brokerage platform available to you. Not only is it they giving you a good offer, a low rate, a credible platform, it's a very powerful platform with a powerful software and features to help you make fast investing decisions, informed investing decisions, help you to save time and save your money by avoiding all the mistakes. Their workshops, educational workshop is very educational in nature. And of course, coupled with their research report and every morning brief that will help you to become wise and informed traders in the market. So if you are keen to take it on further with CIMB, if you haven't had any account yet, I will strongly encourage you to sign up with a CIMB. If you have already had a futures account and you want to create a new one to test out, you can also talk to Nancy. All right, she provides very good service. With that, I want to allow me to change back to my slide. Is that okay?
Yeah. Yes.
Yeah. So let me take back to my slide. But before that, it appears that there are questions who ask you about your platform. Now, the first question that I have on my screen now is: are brokerage fee referring to round trip trade?
No, the brokerage the commission is actually per contract per site. So if you are if we are reading on the 10 ringgit for the intraday, round trip will be 20 ringgit.
Okay, hope that is clear to you. But it's still very cheap, 20 ringgit. Yeah. So another question is on iTrade-CMB. Could we change the volume on the chart from line to bar chart? There's another question.
I think for the normal iTrade-CMB, you may not, but you may change on our iTrade Pro.
Oh, so in normal iTrade cannot, but in iTrade Pro you may be able to do that. And today's promotion is to give you a free 6-month iTrade Pro. Am I right?
Yes, correct.
All right, excellent. So if any more questions, you can put it there. And we will try to address it as we can. But in the meantime, let me show you my screen. I only have hang on, yeah. This is my last slide, which is next webinar. We're going to talk about Chinese webinar called 期货交易 FM70. Okay, so this is on 16 September 2018. It is the same topic like today. If you want to listen to a Chinese version, you can go to this link to log in. Okay, with that, I want to thank all of you for being a wonderful audience today, and thanks for tuning in for our webinar. I hope that this webinar has helped you to understand FM70 a bit more, for you to understand risk management, how many % you can risk in your capital, understand about back testing, understand a bit more about spread trading in FM70, and ultimately know a broker that can enable you to kickstart you or help you, guide you along the way in your future trading to be a good traders. All right, and okay, just hang on there. With that, thank you very much. There's no more question on my screen, and I wish you a pleasant rest of the day.
Thank you.
Bye bye.
Bye bye.
Thanks, Nancy.